What's good, guys? Tito back with another video, the channel where I teach you all about how to make this internet money. Now, the reason why you clicked on this video is because you want to read stock charts. Now, these can be very helpful. Of course, the market is very crazy, so sometimes it'll just not go the way it's supposed to based on the stock formation that it makes. But yeah, I'll give you guys some words, some terminology that should help you read charts just on a T. I'm not talking about like going on the computer and like studying them. These are just like different formations that you can see on like Robinhood or something like that, that you can quickly see, okay, this is bullish, okay, this is bearish, a reversal is coming or not, something like that. So essentially, let's start with the basics. So what is support? Whenever I say support in this video, support basically means this is a level that the stock rarely goes below. That means a lot of limit orders have been set at this very price, so that means it hasn't gone below that in a while. When it breaks support, that means it broke. It's like breaking through a floor, like it broke that floor, so it has to go to the next one. So support levels are literally prices that in the past, whatever, depending on your chart, say it's a day chart, support would be like, say the stock is at 250, next support would be 230. That means it hasn't gone below 230 in like a month if you put on the monthly chart. So if it goes below 230, that means it's broken support. Another thing is resistance. Whenever I say resistance, that means that's a point where buyers and sellers meet. That means that it's not going to go below that price. Usually this is very good for a daily chart because you can see resistance. Resistance, it just means it won't drop below that price. It's pretty much the same thing as support, but support has different levels. Usually resistance is just one level that it just doesn't go past for the day or the week. Now, getting on to the candlestick pattern that you should notice is the three white soldiers, or the three musketeers. I've seen it called both, and basically this signifies three green candles, and green basically means it's going up or it's closed higher than it used to. So that means from a red to a green, that means it's closing higher on that certain candle, so that means the stock is going up. So you see this and it's a bullish trend, so that means it's going up, and bearish means it's going down. So essentially what the three white soldiers is you see three green candles after a successive sell-off. That means it's showing actual momentum. So three green candles signifies a three white soldier, and I went in on this because I played Netflix the other day. I had a 480 call, and I'll show you what Netflix showed. So you can see right around the 475 range, we got three white soldiers, and these are three green candles. So I took that momentum, I bought in. So I bought my 480 call. Now I'm up about 400 something. So yeah, that's a really good bullish indicator. I like to use that one a lot. That one definitely shows some kind of momentum, so definitely get it on that. So the next pattern you should know is a bearish pattern. Now this is called the dark cloud. It's basically the opposite of the three white soldiers, but instead this red candle will be right next to the green one and has three downtrend candles, signifying that there's a lot of sell-off pressure. So it will most likely sell off and then bounce back whenever you see a different indicator. But if you see a dark cloud, which is basically the opposite of three white soldiers, you're basically fine. If you have puts, you're in luck, but if you have calls, it's most likely coming down. So another one I want to talk about is double top. So this can work for each direction. This can work for a upward trend or a downward trend. It basically just signals a reversal. A reversal means it's coming the other direction. So if it's been green, been an uptrend, a reversal means it's coming down. So it's pretty self-explanatory, like reverse. So like basically the double top that we're seeing essentially means it bounces and tests a support twice. So that's what it needs to do. It needs to test a support twice, or test a certain price twice. That means it went up once, it didn't go through. So test, it means it goes up and sees if it can go past, or it goes down and sees if it can go past. So when it tests the support, it means it went up and got rejected. That means rejected means it's coming back down because it said no, it's not going past that. The buyer, the momentum is not enough to bring it past that price. So it comes back down to its support, and if it bounces off the support, it means it goes back up to retest that one price that it needs to get back. And if it gets rejected again, it now forms a double top. But this means that if you form a double top upward, that means it's not going up anymore. If it forms a double top downward, that means it's most likely coming down. So yeah, you can see from this picture, it had one double top. The support wasn't tested, so it came back up, and it had another double top at the top, and then it came back down, another double top, and it came back down. So you basically, that's just the name of the game, and you see a double top, you know it's going to reverse to the opposite direction. Another bullish indicator is a hammer. So you'll see a hammer when the closing price is very bullish, and it makes a little hammer formation. So this most likely indicates coming back up because it's a very strong buy at that certain time period on that candlestick. Another bullish indicator is called a morning star. This shows up when there's a small red candle. That means the sell-off is subsiding, and then you get a strong green candle that shows up right next to the red candle, small red candle, and that signifies the sell-off is kind of like coming to an end. So it usually is bullish. Of course, these are just predictions essentially, like it's just based off the chart. This should do. So if it doesn't do it, because the market is absolutely insane, sometimes it just breaks all types of supports, but based on these charts, it should do what it do. The opposite of the hammer is bearish, and it's called the shooting star. It looks like a hammer, but it's red and it comes down. That means the stick is pointing down. So, and it's followed by usually 3 other red candles, or 2 other red candles. So this shows that there's probably a sell-off on the horizon. So you're most likely, if you have puts, this is where you want to like get puts at. But if you have calls, most likely you're going to see a sell-off. So hold, and yeah, get good expiration dates on all your options and things like that. So there's many different sites you can see charts. I just use Robinhood for this case because I just want to be quick and show you the different formations. But Robinhood is definitely not the best chart you can look at. I like TradingView. There's different apps. There's like Ticker Talker, E-Signal. Like there's different ones like that that you can look and see actually the charts. But if you're gonna fully analyze charts, make sure you do your research. I just gave you some basics. These are ones you could just see on a jump and be like, okay, that looks good, that looks good, that looks like a confirmation that I can use. So if you follow these, you should be able to read charts a little bit. Yeah, don't just use this video. Remember, do your research on everything. Every stock you enter, do your research. They can be on Bazinga, any news site. There's a lot of stock news sites, and make sure you just get in on good trades. Yeah, man. The 2K challenge is not going that well. That we had like another pullback. Then I made my money off of Netflix. So I'm only down like 300 on the actual challenge. So that episode will be coming probably next week. I'm trying to upload every Sunday, guys. But if you guys did enjoy the video, please subscribe to the channel and give it a like if you enjoyed. So yeah, that'll be all for me, and I'll catch you guys next week.